Mark Connolly and Rick Ray are registered representatives and financial advisors with Park Avenue Securities, a registered broker deal and investment advisor. The information you will hear on this show is for information purposes only, and individual situations vary. The information should be relied upon only when coordinated with individual professional advice.
Do you think there are forces out there that are keeping you from achieving your financial goals? Deep in your heart, do you believe the game may be rigged against you? If you do, you need to listen to Big Money, Big Daddy with Mark Connolly and Rick Ray. They'll teach you how to avoid Big Daddy's wealth-destroying tactics. The Big Money, Big Daddy Show starts right now.
You're listening to the Big Money, Big Daddy Show. Today, we have got a fantastic show for you. It's myself, Mark Conley, and I got Dale Pieper here with me from Wealth Design Group, and it is Investor Symposium Week. So there is a lot of information that's being shared, and we are going to do everything we can to share what we learn with you as our listeners. We were talking about what we wanted to cover in some of the segments today, and I know last week we talked about what goes into an initial financial planning meeting and some of those things, and so we had a little bit of a divergence from talking about the investment world, and we definitely want to dive back into that. I think that's great information to talk about, but being that it is Investor Symposium Week, and we thought that we would cover some of the things that have happened throughout the year, because it has been a crazy, wild year. Now, granted, when I say that, and I think most people out there listening, you're probably agreeing, yes, it's been a crazy, wild year when it comes to the investment markets. The truth is, I'm not for sure that it's not always a crazy, wild year.
It's not any crazier than it was last year. It's just something different.
I mean, and that's what we're always trying to convey. We know that you know, most of our competition out there, they're always talking about, here's what's going on, and because of this, you need to move your money here, or get out of the market, or get in the market, or buy these bonds, or put more money in this country, less money in this country, and they're backing it based upon things that have already happened. They're doing it after the fact. And guess what? More times than not happens if you're always chasing your tail. You're going in circles. You're chasing your tail. And so we always like to give information. Now, listen, we get it. You've got your investment portfolios out there. You're banking on these portfolios being able to deliver college planning. You're banking on the fact that these portfolios are going to be able to, you know, not only send your kids to college, but for you to be able to have a great retirement, to be financially independent. So it matters. And the things that are happening matter. And we're always talking about all of these issues, but we put them in a perspective that's what should you do about it, not only from what's already happened, but how can you prepare and position your portfolio for what is totally and completely unknown, and that's what's going to happen in the future. And I think sometimes it's just interesting to look at the mistakes that can easily be made at the end of the day. I mean, when we look at this year, I mean, the European Union referendum vote, you know, that was what was looming over most of the year, and the Brexit, and that was, you know, on every news cycle. That's what everybody's focus was on. And back on June 23rd, you know, they finally did vote, and it was a surprise result. You know, everybody had their prediction, but the UK decided to leave the European Union. And guess what happened?
A lot of people left the stock market that day.
They sure did.
Like a 600-point drop just on the Dow side. But, you know, even across the board, I mean, you saw drops in Japan. You saw drops in Europe. I mean, for whatever reason, there was panic in the street, and the media didn't help the issue either.
Yeah, and I think this is typical. We see this anytime there's change in the financial world. That uncertainty scares people, and anything can happen in the short run. I mean, when you look at short-term time frames, almost anything can happen. And you know, if you listen to our show, we're never going to tell you what's going to happen tomorrow, okay, or what's, you know, happened yesterday. I don't know where the, you know, next 100% move in the market is, okay? But what I surely can tell you is that it's probably, when I say probably, I don't know if I can say, like 99.99% that it's going to be up. It's never gone 100% down. We've never lost everything. And unless every single company in the world is going bankrupt, which that could happen, we need to get a dinosaur on here for an interview with them because we could have a global event. The likelihood is obviously that the next 100% return is going to be up. Okay, that's no guarantees. I always have to say that for my compliance department, but just think logically about it. But in the short run, okay, in short-term investing, anything can happen. And it is our belief that those that try to predict what's going to happen, and they're always making changes to their portfolio, have a higher degree chance of seeing failure. And we see this in the actual results. Dalbar does a study every year where they look to see what the markets have returned, and then they look to see what the actual investors have returned. And as a general rule, the markets are, depending on what time frame you run it at, but it's normally somewhere between 8 and 10% rate of return over a long period of time, whether you're looking at the study over 20 or 30 years. And the actual returns for investors is a little bit more than 3%. That's what's really happening. It is our belief that that's really happening because people are constantly changing their portfolios with what's happening right now today. They're thinking short term. They say they're long term, but they're really thinking short term. Because, when this whole European Union deal happened, it sent ripples around the world, as you were saying, Dale. Fear, panic. I mean, it was scary stuff. We actually had to, set up a time to talk with a lot of our clients to make sure that they understood and said, hey, hold on a second. What does this really mean long term? And, we had a conversation. Hey, I don't know what's going to happen. Sure. Anytime there's change, there's going to be fear. People don't like change. But then people go, oh, you know what? This change doesn't mean it's the end of the financial markets and it's the end of the world. And, okay, so England now has more freedom. They get to keep their own money to put back into their country to create goods and services and promote business. Hey, maybe this could be a good long-term thing. In fact, I'm a fan of any time you make markets more free, it is in my belief that you will see those markets prosper over time, even if we saw the drops like we saw when we had, the Brexit, and there was also, the Grexit, and there was the Chinese asset instability. I mean, you name it, and all this stuff. The media just talks about how it's going to bring the total global economy to its knees and its death and its destruction and its doom. Why do they do that? Because it gets you to listen. Because the more listeners they have, the more viewers, the more readers, the more people that go to the website, the more they can charge for their advertisers and the more money they're making.
Yes, technically, didn't we predict the Brexit thing right? I mean, we said, don't panic. It's going to come back, and literally in a week.
I didn't think it would happen. Like I said, we don't make short-term predictions. I didn't think that was how that was going to go down. We're always thinking long-term. We felt in our analysis that this would be a good thing long-term. I didn't realize it was going to happen in 2 weeks. So
maybe we should write some books really fast.
Yeah.
and get those
and say, look how smart we are, right? We have a crystal ball and we can make these predictions. Yes. So, and I like what you're saying there, Dale, because it's important for people to kind of get the fact that there was a bunch of hype. And at the end of the day, like if you didn't watch any of the news, you didn't watch CNN or Fox News or the Business Network or MSNBC, if you didn't watch any of that and didn't know all this stuff was happening, number one, you would have slept a lot better probably. And number two, you'd wake up and you'd see, wow, the markets for this year, just, they're not up a whole bunch, but, they're just ticking away and they're actually up. Got U.S. markets up, international flat to down a little bit, but I mean, it's nothing catastrophic. I guess it's just that sometimes I would like to say, don't listen to it all. Don't tune in. Don't read about it. But that's just not realistic. I mean, plus we like people to listen to our show, I guess. So,
Right.
so I'm not saying don't listen. But I do think that you need to start taking hype for what it is and hype working with a good financial advisor and coach will help you, because we are human. We do have emotions. It is scary because it's your money and it does matter. These things do matter. World change matters. But you also need to think about, how should I build my portfolio so that no matter what the next thing is, because guess what? There's going to be something else, that I feel more safe and secure, and I have more certainty that I've built my portfolio that's based upon math and science instead of luck, or that it was just the great picks that, my advisor made, if you're hiring someone to do it. That's what we want you to do, and that's what we're going to talk about, is how to do that on the show. That's what we talk about every time we have a live coaching event. And our next event is August 18th at 6:30 in the evening. It's going to be Papacitos that we're doing that one at.
That is correct. Fajitas and margaritas.
Yes, we had dinner last week for Eden, my 2-year-old. It was her birthday, so we decided to go out for dinner. And she told me she wanted to go have fajitas and margaritas.
She must be listening to our show.
Yeah. Well, she doesn't actually really talk that well. I think that's just what we decided for.
Right.
But it was a great celebration.
But yeah, if y'all want to get registered for that event, you can just text the word daddy to 72727. Text the word daddy to 72727. That'll shoot you a link to get you registered for not only that event, but it'll also keep you connected on any future events we have, and just memos and stuff like that we send out. You can like us on our Facebook page, Big Money Big Daddy Facebook page, and you can always call us or text us during the show at 713-826-0426, 713-826-0426.
We would love to have you at our live coaching, or to log on and check out the webinars that we do. We love you listening to the radio show too. You've got to educate yourself, because you don't want to be left to the wolves of Wall Street.
Yeah, and it's important. I mean, even clients that that we've had for years, that we think they've got it, if you don't keep yourself educated and keep yourself in the loop, it's easy to get drawn into, the hype and the drops and the concerns in the markets. I just think of a client that I met with. He came in for his annual review, and we were going over accounts and stuff like that. And we were going over there, and he just kind of brought up his 401k. He's like, "Hey, I just want to let you know, I changed the allocation on my 401k. I took 10% out of international, and I threw it into the domestic markets because they were doing better than the international fund."
Yeah, well, I mean, international's down, U.S. is up. Why do I want to have that international stuff?
So, and we've had that conversation before, and so we had to go back through that, and it's, you sold it when it was down, and it actually rebounded, within a week's time, so it's just one of those things. You've got to keep yourself up to speed, keep yourself educated, and don't forget the basics, that we talk about. Don't stock pick, don't market time, don't use track record investing. I mean, those are, I'd say, the 3 simple rules that we talk about as far as investing. But, there's a little bit more that goes into it. But at the end of the day, if you eliminate those 3 things, you're going to put yourself in a lot better position long term.
Which, the funny thing, I know people out there, maybe they're just listening for the first time. They're like, "What are you talking about, Dale? Those are the things you're supposed to do to pick a winning stock. We want to pick winning stocks, and we want to be in the market when it's up and out of it when it's down. And the way you do that is you find someone that did really good last year and you go with them."
Right.
That's how people think that you should invest. And that's why the Dalbar study I mentioned earlier is exactly what it is, and why people fail. I don't care if you're, Donald Trump, a sophisticated investor, a wealthy person, a middle-class person, a not as much wealth person. Is that a politically correct way you say that? Or are you supposed to just say poor?
Just move on.
Okay. Okay, got you. But it's human nature to want to gamble and speculate. Why do you think we like Vegas, right? With your investing, with your long-term investments that you're building towards the goal of being financially independent, of growing. Maybe it's more about legacy planning, what you're leaving behind for your church, your charities that you love, your children. whatever it is, you've got to start doing this the right way. And we're just giving an example of this year of all the crazy things that have happened, all the hype, all the talk of the, geopolitical disasters and everything that's happening. The market is about buying businesses that are out there trying to make a profit. They're trying to create new goods, services, technologies, and make profits. And by putting money there, you're just banking on that. You want to really, really dive into how to build a portfolio that's prepared for the next big thing. You just need to make sure you come on August 18th to Papacitos at 6:30, but you do need to RSVP by texting the keyword daddy to 72727. Text daddy to 72727 or give us a call, 713-826-0426, 713-826-0426.
Big money, big daddy.